Hello everyone. Welcome to Crypto Weeklies. My name is Josh and I wish you have a really good weekend ahead. So today we are going to discuss on yet another AI technique and its use case in determining fair value of Bitcoin and forecasting the fair value of Bitcoin from 2023 to 2027 using the output of the AI model which I have designed. And this concept of fair value again ties with the theory that Bitcoin spent some time in overvalued territory and time in undervalued territory, but its generic direction or trajectory is slowly increasing. So by that I mean each cycle Bitcoin makes new highs and creates newer lows than prior cycle, and the reason being the asset is still in its growth trajectory, and we can use historical data to determine how the fair value of Bitcoin's network would kind of have its forecast from for the next market cycle or the couple of market cycles from in the future. And these values are flatlined, and that by that I mean the seasonality is taken out and made non-stationary. That's why you might see that there aren't any major spikes or major pullbacks in this chart. But if you apply another technique, or if you can and I will share with you how to do that with an example. So this is the general trend of estimate. Let's say at June of 2023, the fair value is estimated at 22,000. But let's today the price of Bitcoin is at 27,000. So then by that the forecasted price and the actual price is within one standard deviation of mean for Bitcoin for this market cycle. So similarly, during the bullish phases of the market, let's say with Bitcoin's halving in May of 2024. Let's take 1 year from that as an example, because that has provided to be a historical peak of bull market for Bitcoin so far. So let's take April of 2025 as an example. The model currently predicts $39,000 as the fair value of Bitcoin at that point of time. But if you see if you do this exercise in TradingView, you can see that in 2017 the fair value of Bitcoin was around 4,000, between 4,000 and 5,000, whereas the actual price of Bitcoin at its peak was around 20,000. So that means the 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 price is 4 or 5 times the fair value. And due to the law of diminishing returns, in the next cycle, the 4 or 5 times multiplier was replaced by the 3x. So just continuing this diminishing return trajectory forward, one can just use this fair value forecast as an example, and say that in the next market cycle, instead of a 3x, Bitcoin might do a 2x. That would provide a actual price at 76k. Or let's say if there is another change in macroeconomic outlook, then it might be a 3x, and then it could be around 120k. So yeah, even this can also be used to determine what even in the next bear market, what would be the difference between the current fair value of Bitcoin. Let's say we have a bear market after 1 year from the all-time high, would be in somewhere in 2026, April of 2026. The fair value would be around $50,000, and let's say if the actual price is one standard deviation away from the mean, this fair value can also help us determine what would be the trajectory of Bitcoin's price in future from that point. So that can help us determine if Bitcoin is undervalued or overvalued at a point in future. But currently this helps us formulate a strategy of whether it is a good time to whether it is good time to layer in or layer out of Bitcoin based on the current position of Bitcoin's price relative to Bitcoin's fair value. Thank you. Hope you like this content today. If you did, please give us a like or subscribe to our channel. And I hope you have really nice weekend ahead. Bye bye.